The gap in terms of like the potential is incredibly enormous.
Yeah.
Morgan Stanley, their sell side, put out a report in 2023 that they had done some kind of like market level analysis showing they thought there was 326 gigawatts of untapped solar capacity. I think like with that report, they actually improved Prologis's price target, which was
Yeah.
really interesting to see, right? Because they were like, these
Yes.
REITs can absolutely, this is a profit center. And so, yeah, this report shows that we've just gotten a little over a gigawatt deployed amongst the US solar real estate companies.
Hello and welcome to the Solar Maverick podcast. I'm your host, Benoy Thanjan. Today, I'm excited to have on the podcast Victoria Stulgis. Stulgis?
Got it right? Yeah.
Oh, okay. Victoria Stulgis. She's the CEO of Black Bear Energy. I'm really excited to have her on the podcast today. Black Bear Energy helps commercial real estate owners deploy solar and storage across their portfolio. They recently released their 2025 Real Estate Solar Leaderboards report, which tracks on-site solar deployment across major U.S. real estate owners and managers. Victoria, welcome to the podcast. I really appreciate you making time today.
Thank you for having me on.
Anytime. I mean, this report, I've learned so much, and I appreciate you making the time to go through the report. But before we start, can you talk about like Black Bear Energy, and then too, like it's been recent, the new CEO of the company as well. And can you talk about your journey to where you are today as well?
Yeah, absolutely. I'll start with Black Bear. Black Bear Energy is 11 years old. We're owners' representatives for institutional property owners. As you mentioned, we really help them to deploy on-site solar and battery storage within their portfolios. We were founded by Drew Torben, who before Black Bear led the renewables group at Prologis. And as we dig into the data today, you'll see, they were doing solar really before anyone else was for almost a decade. So he worked there for almost a decade and did, over 100 megawatts within the US and globally while he was there with a small team. He left to found Black Bear because he realized that he figured out really what it would take to help other institutional property owners really deploy solar and batteries out there without their portfolios. And so he built a team and a process to be able to enable us to help all their real estate owners scale renewables within their portfolio. As you mentioned, I took over as president. I'm not technically CEO because we're owned by Legions. So I'm president now that Drew has left. He left at the end of last year. I have been with Black Bear for over 9 years. So I've been there from the pretty early days, started out working with clients at Black Bear. Before Black Bear, I worked for 2 different nonprofits focused on business solutions to climate change. So I started my career at Sir Richard Branson's climate change NGO, the Carbon War Room, and they were focused really on helping to accelerate business solutions to climate change across industries. I got to work in the maritime shipping industry, which was totally new to me and really cool. Carbon War Room got acquired by the Rocky Mountain Institute, now RMI, after my first couple of years there, and I felt super lucky. Amory Levins had always been an inspiration to me, and RMI is known as this best-in-class climate change nonprofit and energy efficiency nonprofit. So when I was there, I worked actually with the Fortune 500 companies who were doing virtual PPAs. So we now call them hyperscalers. Back then we weren't, but they were the groups that were doing these virtual PPAs before anyone else. And we worked to kind of take a lot of learnings and case studies around how to deploy virtual PPAs and shared them with the rest of the corporate community. I was lucky. My boss at what was the BRC has since spun out to REBA or SEBA, was actually chairman of the board. Black Bear RMI was originally an owner and seed funded Black Bear. And so that's how I met Drew 9 years ago. And the rest is history. But I think the corporate stuff is interesting because there were a lot of learnings we took from how to scale corporate VPPAs that I've seen us integrate into Black Bear with scaling on-site with the real estate community.
Yeah, that's such a really interesting background, and to hear how you got to where you are, and I apologize that you're the president of
That's like,
Black Bear Energy, and how relationships, right, brought you to Black Bear 9 years ago, and then obviously, like, I can't imagine, like, how much things have changed from when it was basically a startup, right, essentially, to, like, now, and then I'm sure there's, the Solar Maverick podcast is about solar and entrepreneurship, and I'm sure there's so many learnings that you could talk about from that experience.
yes, yeah. I mean, so Black Bear did their Series A. So we were seed fund invested by RMI, which is unique to be funded by a nonprofit. But RMI's done that a couple times. Our Series A investor, Boulder Ventures, Kyle Lefkoff and the crew there are fantastic. We feel so lucky and blessed to have found Kyle and the team there. And then back in 2022, we were sold to a Blackstone portfolio company, Legions. Legions in September of last year went public through an IPO. So it's just fantastic to be a part of a larger organization. We've got a lot of great sister companies that we love to kind of understand how we can work together. And they're just a bunch of really impressive companies that Legions has put together and is now building something newer and better.
Yeah, definitely. It sounds like an exciting time at Black Bear Energy, and I appreciate you sharing, your experiences and obviously sharing the 2025 real estate sort of leaderboards report. And like I find like the information really like interesting. If our audience is not familiar with it, can you talk about how Black Bear built the solar leaderboards and what makes this data set unique to what's out there today?
Yeah, absolutely. So SIA puts out the Solar Goes Corporate kind of leaderboard similarly. And so they did that, they've done that for years and they started with on-site. So, Prologis was always top. You had Walmart, Target in there. And it was really corporates, but real estates came in. Um, they actually then started also looking at VPPAs that groups were doing, and real estate kind of just got hidden. And so, we work with the real estate community. We knew that everyone likes competition amongst peers and to be able to rank and see transparently what these groups are doing, to be able to learn the trends of how are people doing this, who is owning the solar, is the power being used behind the meter or being sent back to the grid. So when we saw that the real estate part of the data was kind of getting lost as the virtual PPAs took over, we decided to do it ourselves. So we've taken some data that SIA had already put together. We take the data that we have with our clients, and then we proactively reached out to a lot of the industry leaders who now self-report. And we take all of that data and every 6 months publish to show and rank these real estate institutional property owners and managers amongst their peers and amongst asset types. We're looking at just the US and we're looking at projects that are actually energized. So anything under construction or in the development pipeline, we're not showing. We're showing stuff actually deployed today.
Yeah, that is huge. I mean, I'm sure it's a big undertaking to get that information, and then obviously projects that are energized, right? Because sometimes you don't necessarily could tell based on pipeline and other things. So that's really
Yeah,
interesting.
yeah, absolutely. Our analyst Zoe Zwecker has really taken the lead on collecting all the data, but it is a big effort and it is not our core business. But we really know this data is so valuable and want to make sure everyone has it. And yeah, a big thanks to all of the industry, professionals that actually spend the time submitting in the data. There's a lot of work to actually verify it, and we started collecting it 3 years ago. We realized people actually want more granularity. So we actually went back and said, we want to know the actual energization date. We want to know the deal structure, the contract structure. So we've gone back to make sure we fill a lot of that data and are actively understanding, who sells the assets, if they decommission them, to make sure it's all accurately tracked.
Yeah, I mean, it's amazing, like the data and then what you could learn from that data and basically all the information that Zoe's, helping to aggregate into a leaderboard, which is pretty easy to kind of understand a lot of information very quickly. So I appreciate, Black Bear and the team doing that. And what does the scale of data tell you where like the market actually is today?
Yeah, I mean, it's really impressive what some of these top groups have done. So if you look at the top of the leaderboards, Prologis is at the top. They've energized 309 megawatts of on-site solar within their portfolio. So that's going to be on roofs. It could also be parking lot solar or parking canopies. Public storage is second, which is really impressive to see. They have 111 megawatts. They've done over 1,100 projects. Their average project size is actually tiny, right? Prologis, with those 309 megawatts, has done 272 projects. So those are the clear leaders at the top. And then there's this, long tail that's coming after those leaders. They don't have, Prologis has a incredibly large, I've heard 120, 130 person energy team. They have, they're the largest industrial owner in the world. Public storage, what they've done is really impressive. At the same time, right? They are an owner operator. They don't have to worry about kind of tenant concerns under the roof in the same way that an industrial tenant might. And then because they're an owner operator and how they've structured, we know they've been able to monetize the tax credits, which, some of the kind of more core real estate companies that we work with every day really don't have the ability to monetize the tax credits. But what we're seeing, there's now groups that are really coming online with a lot of megawatts. It takes time to get that kind of first project done and then figure out how to do a repeatable, scalable process. And anyone who's in the real estate industry knows, most of these groups, they might own 500 assets, but it's a very small team. They outsource a lot of things. So with our clients, we might work with one or two people that spend just a small portion of their time on solar. So really impressive to see the potential that these groups have to really scale solar across their assets.
Yeah, definitely. That's really interesting to hear. And it's so interesting too, as you mentioned, just to reiterate, like there's three really big players who are doing a lot of solar. And then, it's interesting too, when I looked at the data, like Prologis is over a gigawatt, right?
Yes,
Of
and the
solar, which
gigawatt is globally, right? Whereas
globally,
the
yes.
309 is in the US. I know folks have asked us about that. Yeah.
You definitely should clarify. Yeah, definitely. And that's interesting too. I feel like you could talk to this so well, like, because I've obviously spoken to a lot of large REITs and commercial industrial clients. Like the language too, like the way you communicate with them is very different than like you would communicate with another solar professional. I know like in the real estate industry, like NOI,
Yeah.
they kind of want things similar to the real estate lingo. So you translate to solar. Like I'm sure that was like an adjustment. And then it's really like learning their language and to explain solar, right? And the opportunity.
Yeah, absolutely. Yeah, I mean, real estate was new to me when I joined Black Bear 9 years ago. Obviously wasn't new to Drew, and, there were quite a fair few folks we've had join the team that really came from the real estate side of the business. So we've built that team that does real estate plus solar, but it is this unique niche. So yeah, our most of our customers care about rental income. They want it to be good income, not bad income. They care about cap rates. And the most important thing is we can't impact, their core business, which is the tenant under the building and the ability to, do for, in the future what they need to for that asset to continue to add value. So for sure, solar for real estate looks very different today than it did 10 years ago. This is an industry that now has really figured out how to manage a lot of the risks. And we're seeing that every day when we work with our clients.
Yeah, definitely. I really appreciate you explaining that. And it's amazing how sophisticated these clients have done in a very short period of time. And you've been actively a part of that, which is great. One thing that I found interesting is that you track both behind the meter and from the meter projects. How do these strategies differ across leading real estate owners?
Yeah, it's a great question, and one that the data honestly surprised us when we saw it, because the projects we see every day with our clients, the majority of our projects are third party owned, and the majority of them, the energy, it's front of the meter. So it's either community solar or feed-in tariff programs. We see those in a few geographies, Massachusetts and LADWP. we are really not seeing as much volume that's either owned by our clients or that the energy is used on site. And there's a variety of reasons for that. But if you look at the roof behind me in the building here, it's a large industrial building. These are the ones where you can host the most amount of solar and really get projects that have scale. If you think about industrial as an asset class, the average industrial lease is 3 to 5 years. They might have a lot of options, but there's no guarantee, right, that they'll exercise those options. And the average industrial tenant is a 3PL warehouse user. So, rule of thumb is your average 3PL might use enough energy that a solar system sized at, say, 20% of the building. So, you wouldn't be able to max it all out. And then, if you think about the nature of the tenants pay the utility bills, their credit might be all over the place, and they're only in there for 3 to 5 years. Finding a 20-year credit-worthy off-taker is really challenging. Prologis has for sure unlocked that. If you read about their Solar Smart program, they're owning that solar. They understand that risk better than anyone in terms of the future tenancy and the future energy usage. But if you're not Prologis and you own these industrial assets and you don't want to invest solar, the best way for you to find scale and value to your portfolio is to do a strict rooftop lease. You don't involve the tenant at all. You're signing a lease. The solar developer's coming in, they're investing their capital. They're putting their at risk pursuit development capital. They're applying in the program. They're finding the subscribers. Our clients love it because they just get that site lease rent. And some of these projects can be genuinely very lucrative.
Yeah, definitely appreciate you explaining that. Like I've seen, especially in New Jersey and New York, for rooftop industrial sites, like the lease rates are pretty high for, a roof that obviously you can't really, I mean, you're now making income that you didn't make before. So that's really interesting to hear. And then with the proliferation of community solar in front of the end, and you mentioned like VPPAs becoming more popular.
Yeah, it's interesting. We really haven't seen any of our real estate customers do VPPAs. So it's really just been this community solar feed-in tariff. But
Mhm.
yeah, the name of the game is, and our clients are all really thoughtful, right? They're not going to start fresh if a building's on the disposition list. They're not
Oh,
going to look for, doing a roof lease if they plan to redevelop the building. And they, understand that better than anyone. And then if they have concerns around tenancy, right? Is a future tenant going to come in and really change things? So they're really thoughtful around how they are developing these rooftop assets to not impact their core business. A lot of what we see is really just being strategic about adding more reserve area. So it'd be pockets of the roof where solar doesn't go, taking into consideration, hey, a future tenant might want more HVAC. Let's allow for that. And so that type of risk mitigation is what we've seen really develop over the last decade.
yeah, that's interesting, right? Because they have to keep their options open, as you said. Like the leases are just 3 to 5 years, right? So potentially you could get an extended. And are they using like potentially like solar like as a sort of way to get like potential tenants as well? Like, hey, you could say you're using renewable energy as the off taker, is it still kind of not something?
Yeah, that's a great question. So there are some community solar markets where the tenants can be off takers. That's mostly going to be Illinois and to an extent Massachusetts,
Yeah.
Maryland and New Jersey, and actually a lot of our projects. We were just at a ribbon cutting yesterday in Illinois, and half of the solar production is carved out to go to low and moderate income off takers, residential rate tariffs, and they're getting a significant discount on their utility bills, 10 to 20%. But there are some community solar markets where the tenants can be off takers.
Yeah.
And that provides a great amenity as well because they're also getting a discount off their utility bills. And then for sure, where we are seeing, I think we expect, especially with the increase in electricity prices, right? Everything from the data center boom to the war in Iran in terms of what's happening to energy prices, all of that just helps solar compete. Solar does better with high electricity prices, as we see in California. We've done a lot of behind the meter projects in California, especially think of like an office campus or a life
Yeah.
science. We've done a lot of work with some RV campsites. In all those cases, the real estate owner is actually paying the utility bills, and they know it's going to be that use type and that amount of solar. So we have for sure done a lot of behind the meter, but for sure the growth potential in this industry comes from these large flat industrial rooftops. There are some million square foot industrial buildings, we call those bombers. You can get 10 megawatts on one roof, and that's really impressive, right? To get that level of capacity and at the distribution level, close to where the grid really has a demand for electricity.
Yeah, that's really interesting. I mean, there's so many different points that you mentioned, and it's crazy to hear that there's 10 megawatts like distribution level projects, right? And is that like, I guess, a combination of like rooftop ground mount carports or?
Some of those 10 megawatt systems that we've done have been entirely on one roof.
Oh,
So
okay.
no carports, no ground mount. There were, million square foot roofs or even slightly larger. But yeah, really impressive when you get that level of scale.
Yeah, definitely. And I appreciate you explaining that. And it's interesting because you kind of already mentioned this already, but like what states are popular? I know you mentioned like popular community solar states. You mentioned obviously the SMART program, the LA feed-in tariff. You're doing a lot in California. Can you talk about like where you're seeing the most activity based on the leaderboards report?
Yeah,
Energized
absolutely.
project.
So if you look at the leaderboards data, I think it's no surprise California is in the lead. The majority of those projects are all behind the meter. Everyone knows California has the highest electricity rates, NEM 1.0 and NEM 2.0, which pretty much all our projects energized
Mm.
today or were built under either of those programs. And it's a sunny state. So California leads with 35% of the total installed capacity. Next up is New Jersey. I think also not a surprise. New Jersey has been a state with, the first SREC programs and then SREC 2, and now they've switched to, they've got a community solar program and a NEM program that are both supported by fixed solar rec incentives that still the utility pays for. But New Jersey's right behind California at 33%. And then you've got Maryland, third, which is for sure a surprise to us, and that is entirely driven by those rooftop community solar projects. Massachusetts is fourth here. So, and the one I'd say, that we expect to see in the future on the leaderboards, we're doing a ton of volume right now in Illinois. Yeah, I was just out at a ribbon cutting. There was 2 buildings totaling more than 5 megawatts. I think we know amongst our clients, we've got over 50 megawatts that's either actively under construction or due to start construction in the next 6 months, and Illinois has also had this great rooftop or it's a community solar program. You could do ground mounts or rooftops, but they've had some things that have incentivizes that rooftop development. So, yeah, all 4 of those states have for sure had really seen the majority of our volume.
Yeah, definitely appreciate you sharing and and walking through. That's really helpful. And then I guess obviously this is only energized projects. How much larger do you think the pipeline's there that's not yet captured in the data? Is that something that you look into closely? Because when you do the next leaderboard report in 6 months or the one next year, you're like, oh yeah, there was that project. Let's see if it's actually been energized. Is that part of the
Yeah.
process?
Yeah, no, that's a great question. The gap in terms of like the potential is incredibly enormous.
Yeah.
Morgan Stanley, their South Side, put out a report in 2023 that they had done some kind of like market level analysis showing they thought there was 326 gigawatts of untapped solar capacity. I think like with that report, they actually improved Prologis's price target, which was
Yeah.
really interesting to see, right? Because they were like, these
Yeah.
REITs can absolutely, this is a profit center. And so, yeah, this report shows that we've just gotten a little over a gigawatt deployed amongst the US solar real estate companies. Obviously, we don't have everything, right? Like if there are
For
groups
sure.
out there that aren't self reporting, we haven't captured that. But it does show you how much more potential there is out there. To your point of like, what are we seeing? I mean, we know how much in terms of our Black Bear clients is actively under construction, and we know there's a ton of volume. There's some entrants that aren't even showing up on the top 20 today that we know are, signing contracts for significant amounts of megawatts that will put them on the leaderboards in the future. But yeah, this is just a lagging indicator. There's so much actively under construction. With the ITC going away, there is this huge
Oh,
burning
yeah.
platform and this rush to get things far enough along to safe harbor the tax credit. And if you look at some of the rules around commence construction and when they need to be energized, we're going to see that capacity built out over the next 4 years. So we expect there to be considerable growth. That doesn't really take into consideration new markets that may open, that may really drive rooftop hosted solar projects. But, all you have to do is open up a new state. And, a lot of these states have significant industrial ability to host a lot of solar. Pennsylvania is one as well. There's a lot going on with the policy there, and there's some research out for anyone who follows Pennsylvania virtual net metering and the Homrick rule, but we're seeing a lot of volume being developed in Pennsylvania, and we'll see where that goes with the policy.
Yeah, definitely Pennsylvania has been interesting because obviously I think you're talking about the 2 megawatt or 3 megawatt. I think you could do like net metering, and obviously there's been like potential. I think it's HB 1580, which is the community solar bill in Pennsylvania that's been out there for a while, but it's never been passed. So that's really interesting.
Yes, yeah, we've already energized some projects in Pennsylvania. We had a ribbon cutting a couple weeks ago with EQT. They had two industrial warehouses side by side in Mountaintop built under that virtual net metering HUMRIC rule, where the energy gets exported to the grid. And yeah, there was just an Aurora Energy Research report put out that shows that if you let everything get built, which I believe is up to 2 gigawatts of solar. There's, I think, 2,000 projects in interconnection that it would actually save ratepayers $1 billion,
Oh,
even after
wow.
you pay them the retail price to compare. So, and it's all driven by, if you look at like PJM capacity prices and the auctions, and those right now are being passed through to the ratepayers in Pennsylvania. So there's some great research being done out there to show that these rooftop solar projects that come online at the distribution level are actually a benefit to the grid. They're a benefit to the ratepayers. We all know we need new capacity to come online. We need it to come online quickly. When you do these types of projects, right? Like the developer is the one paying for the infrastructure grid upgrades. So it is all good for those of us who want to keep the lights on and keep the electricity prices low.
Yeah, definitely. I mean, obviously, solar is the best way, as you said, to mitigate high electricity prices for the retail customer and not just retail, and it's the fastest to come online and the cheapest. So that's amazing to hear about that. And you don't think obviously, it seems like once the big, beautiful bill was signed, everyone's rushing to build projects. You talked about like the safe harboring. People want to get the full investment tax credit, the 30%, and then I guess by July, you know, you you have to be in certain, I guess I'm trying to think of an easy way to say this, but certain like sort of stage in your project to be able to qualify for the incentive. Do you think that you'll see less construction after that because you won't be able to get the full ITC? I know you mentioned like you think it's still going to be pretty strong going forward. And is that because of higher electricity prices or, I'm curious to get your thoughts.
Yeah, it's a great question. I mean, without a doubt, the short-term impact of the ITC going away hurts the economics. So we're constantly running competitive RFPs. Right now, when we're running RFPs, we are pricing them. If you're able to safe harbor, what are the lease rates? If you're not able to, if you have no
Oh,
investment tax
interesting.
credits, what do the
Yes.
lease rates drop to? It's really hard to get to developers to even price without the ITC. That's not their focus right now. And so it's hard to know like what's actually real. But, we see depending on the market, those lease rates might drop in half, they might drop by a third. It might make the project just to a point where it's not worth our clients' time in terms of, transaction cost and effort. So immediate impact, not good. If you look long term, right, if you look at the cost to build solar in Europe, it is significantly cheaper. Europe does not have those types of tax credits. They do have really high electricity prices. So I think we do expect, there's going to be this transition period. We expect the market to correct itself. Yes, tax equity will go away. That also means that the tax equity investors, which have, very strict contract needs, they have high cost of capital, they add transaction costs. That also gets to go out. That's a benefit. And we expect the industry really to go through this transition where there's going to be some consolidation between the developer community and everything that's going to result in. But, we expect it to be a stronger industry after the fact. Supply and demand will do its thing. Competitive markets have worked for a while here. But then, yeah, you've got these other tailwinds of increased electricity prices, a need for new capacity, and the states who really have always valued solar. We expect them to adjust their policies to ensure there continues to be a market in those states. So, we've got some time to build out the projects that we've got safe harbored, and then we've got a transition period through it. I think we're really excited as we get through that phase to focus on battery storage. The grid needs batteries. Our clients can host batteries, right, in areas, same thing, where the grid needs it most, feeders and substations that really could use some balancing. So we expect batteries to be a real focus for this real estate community. We know they're out there getting tons of unsolicited proposals. We're working to try and find out what's real, what markets are real, what they should actually spend time on, who they should work with. And we do plan to add a battery storage leaderboards component to the report in the future as well. If you did it right now, there'd be so few. I mean, our first projects 11 years ago were behind the meter batteries as part of the LCR program in California, but the market for batteries just hasn't been there the last couple of years. But it's coming, and it's coming really fast, and it's exciting, and I think we're going to see a much stronger, smarter grid because of it.
Yeah, definitely. That's really interesting. Obviously, like whether it's behind the meter, right? Battery storage or front of the meter. And then I think the challenge is like you have these variable cash flows and getting financiers comfortable with that. So it seems like only certain markets, like you were talking about smart program with the feed-in tariff, that's also for battery storage. I've seen Veeder in New York has a battery storage component, and then I've seen some utility RFP processes. Are you starting to see that, or is that still too early? Everyone's obviously now a solar plus storage developer after the big beautiful bill and the extension of the standalone battery ITC.
Totally. Yes, yeah, yeah, we're seeing some diversification there. Yeah, I mean, all great questions, and yeah, I think those are the markets. We know Massachusetts is a market that's open for business for front of the meter battery storage. Same thing with New York. Con Ed and Long Island have historically had the best economics. In Manhattan, good luck finding a place to host a battery outside, since the fire department there doesn't allow indoor. But for sure, outer boroughs and Long Island, we've seen projects there. The markets we have our eye on that we know there are programs being finalized, Illinois, New Jersey, and Maryland. Battery storage for behind the meter is, for sure open for business today in California, New Jersey, Illinois, Massachusetts, and a couple other states. You really just have to have an energy user that has very peaky load that's getting hit with those demand charges. And you have to know that they're going to be there for a while. But yeah, I mean, I think you hit the
Yeah.
nail on the head in terms of can these battery storage developers who are sending these unsolicited proposals, if they got a site lease signed, if they applied for interconnection, could they actually go and finance them today? And looking at, underwriting the cash flows on a battery with all the stacked incentives, very different than underwriting once you put the solar in, historical weather data, the capacity, and those systems work. So it's a fundamentally different thing than underwriting these batteries that are playing in new markets, a bunch of different incentives stacking, and the capital is really just starting to find its way. So yeah, you pointed out some of the like utility RFPs and utility owned battery programs. Those for sure, take care of some of the concerns of like both interconnection, is the utility going to approve it, and do we have concerns about underwriting if the utility owns it? Definitely not.
Yeah, that's so helpful. This is like great information and perspective on battery storage. I was going to ask you like, I mean, I think there's like real value because like battery storage or energy storage, there's so many different potential cash flows. And then, it depends on like where you're kind of selling it to as well. Like it's so complicated. Like I feel like, obviously your customers would need more help maybe on this than on a solar project because, and it's still not really established
Yeah, I
as
mean,
well.
yeah, we still joke daily that like this is the solar coaster and solar is the Wild West, and we're like, well, if solar is still the Wild West, which it is, I think it's even maybe more complex than it was a couple of years ago, and more moving more quickly. Battery storage is like the medieval ages, but there are for sure groups out there that have figured out how to underwrite these, figured out, the concerns they have of niches of which AHJs are approving solar, how to work with the local fire departments. So there are groups out there absolutely that have started to deploy batteries that we're talking, 1 to 5 megawatt, mostly 4 hour duration. At most they might need 15,000 square feet of space. So it can be distribution level, front of the meter
Mm.
batteries. I think, we all know that that is where the grid is going in terms of, it's only a matter of time before all the utilities realize that that is going to make a lot more sense than just building out a bunch of expensive peak capacity.
Yeah, definitely. I appreciate you explaining that. And then how many of your clients, or not how many, but like, do you get perspective from your clients regarding like the fire safety issue with lithium ion? We're actually building or develop one of the largest solar projects in Manhattan. And obviously, like I've heard so much, and the first community solar project in Manhattan, but I've heard so much from the FDNY about the fire safety issues. And sometimes it's interesting because when I talk to different battery storage manufacturers, they say like the fire issues overblown, especially like the lithium ion technology has gotten a lot more fire safe. And then obviously people are using other technologies as well, that there's not that fire risk. I don't know if this is something that your customers are talking about or curious about, especially it sounds like they want to do a lease payment. They don't really wanna own and obviously they don't want an interruption in their
Yeah.
business primary.
Yeah, absolutely. No, I mean these with lithium ion and these systems, there's going to be that fire risk. There's definitely folks on my team who can speak to it more eloquently than I can, but we know a lot of the systems that we're exploring deploying, these are fully containerized. They have fire suppression, but there's always that risk, and a lot of the work of the development is to make sure these systems are built with the best practices to complete as much as possible limit those risks. There's a lot of work that they do with the local fire departments to ensure they get everyone comfortable, but yeah, it's a risk and something that we're actively working through to make sure it doesn't negatively impact our company's core business.
Yeah, definitely, that's really helpful, and going back to the 2025 real estate solar leaderboards report, if you could distill the report into 2 or 3 things, what is the leading things that real estate owners are doing that others are not, or 3 major insights from the report that you
Yeah.
think our audience would be interested?
Yeah, it's a great question. I know, we kind of thought high level, like, what does it take to have impressive capacity built throughout your portfolio? And we think it takes three things that you'll see across all of these, leaders on the leaderboards report. The first would be really kind of from the top down, a clear commitment that we want to do solar because we see it as a profit center and we're going to figure out how to do it in a way that's not going to impact our business. To have whether it's high level targets of megawatts or some type of something that sends a signal to everyone, this is something that's worth spending time on and we all need to get bought in. That's number one. Number two would be kind of the process and technology. Doing these projects takes time, and we want to do them in a way that is scalable and doesn't impact core business. So having like streamlined workflows, processes, software solutions to manage all those approvals, to track progress, and to mitigate risk is really important to scale these programs and do more than just like a one-off pilot. And then the third thing is expertise, right? Some of these groups have it in-house. Think about Prologis' 120 or so person energy team, and or through an external owners representative like Black Bear, and we have competitors out there too. But all these groups, they really do need market knowledge, legal resources, project management capacity to continue to execute at scale.
Yeah, definitely. That's really amazing. I appreciate Victoria you summarizing the report and obviously walking us through the major highlights of the report. If our audience wants to learn more about Black Bear and how they could get access to the 2025 Real Estate Solar Leaderboards report, like what's the best way for them to do that?
Yeah, absolutely. So the leaderboards are available on our website. So you go to blackbearenergy.com, and then under the projects page, you'll see leaderboards. It is interactive, so we definitely recommend that you go into, you have to hit accept cookies, view it on a website, not a phone, but you can go through and click through the data and get involved with it. If you want to reach out and get involved with Black Bear, info@blackbearenergy.com, or you can reach out to myself on LinkedIn or contact a member of the team.
Yeah, definitely. We'll have that on the notes of the podcast. And then is there anything that we haven't spoke about the real estate solar leaderboards report that we didn't cover that you would like to talk about?
I think we covered pretty much everything. I'll just echo that this is a lagging indicator, right? So already it's May 8th. So we've had 5 more months of projects that have energized, and then we know how many projects are actively under construction. So we're really excited to see how the leaderboards continues to change and how, yeah, like the most important thing here, right? This is what the real estate community can do to bring additional clean capacity onto the grid. For anyone who's really looking at saying, how can the real estate industry contribute to a decarbonized environment? Hosting solar and batteries, whether the energy is used on site or off site, is really the one of the biggest opportunities the real estate community has to make an impact.
Yeah, definitely. And like what you mentioned too, rising energy prices. You mentioned too, if like I know most of them is through a lease payment, but if you own the system, then potentially, obviously, including it within the lease has been very lucrative for a lot of companies I know that I've talked into in the space. And I'm sure you've seen that as well, especially with rising rates.
Yeah, absolutely. Those systems that are kind of solar as an amenity, and they can just say, "Hey, we own the solar, will and now pay us more rent from solar," especially in these lucrative markets like New Jersey and California and Massachusetts. There are some fantastic returns out there, and we've for sure had clients that have owned those projects and seen impressive returns without the tax credits because it's been hard for some of our clients to monetize it. So we know there's going to be a market for that still after the tax credits go away.
Yeah, that's interesting too, because obviously you work with a lot of real estate investment trusts, REITs, and they can't take advantage of the investment tax credits. So I don't know. That's why I guess you would prefer like third party sort of financing where it's just a lease rate, right? Where they're not involved with the ownership of the property.
It's definitely one of the core reasons, some of these REITs have a portion of their business that also has tax liability, or they've set up TRS. The majority of them don't have the ability to do that. So they either haven't owned solar or they've done solar without the tax credits. In a few rare cases, they've been able to sell the tax credits once transfer was made available. But Yeah, so we know there are groups out there that are saying, hey, once the ITC goes away, we may want to look at owning solar. There are other groups that say we want to spend our capital doing our core
That's true.
business, and we always want someone else to be the one to own it, and operate it, and have to manage, the EPC contract and whatnot. So I think we'll continue to see that level of choice be a desire and vary amongst the community.
Yeah, that's really interesting 2 points that you made, and then obviously with transferability, it's made it easier to transfer the tax credits to someone else, so
It theoretically has. One of the major issues with transferability is you have to continue to own that asset for another 5 years, and so that's been an issue past energization, right? To not
mhm.
have recapture of the tax credits. So that has been an issue, right? A lot of the real estate community is in the business of buying and selling real estate every day, and so if you think about how long it takes to build these projects and have them energized by the time relative to your hold period, right? It's with the exception of the long-term holders, it's more common, but that 5 years after these projects are energized, someone else would own them. So transfer didn't completely solve the tax credit for reissue, but now the ITC is going away, and we'll see how it all plays out.
Yeah, definitely, that's a great point, and I appreciate you explaining that, Victoria, and I really appreciate you walking us through the report, and this was really helpful, and, thank you again for making the time today. It was a great interview.
Yeah, thanks for having me on.
Oh, anytime. Thanks.